Welcome back. Well, as always, it's time to now get a roundup of the commodity market action at this hour. We have Manisha with us. Manisha, so what's the headline for you today?
Well, I'm looking at the crude oil prices because there's various big movement coming in for that one. And as you guys were pointing earlier, well, yes, there's no place to hide here as well because almost all commodities are trading slightly in the negative. It also has to do with the U.S. non-farm payroll data. It could go either ways. And then the strength in U.S. dollar index also seems to be weighing on. Add to that the fact that all the economic data that we have seen come in the last week or fortnight has been on the weaker side. The Brent crude oil prices, let's start with that because this has been the newsy bit all of this week, is still trading near 14-month lows. We did see a knee-jerk reaction overnight and the prices did gain 1% after the OPEC and allies talked about postponing their output increases, but that didn't hold for too long and is the reason that we are headed for a 6% weekly decline. Remember, we already have a July and August as a negative and September first week is down by 6% right now. So, well, yes, the pressure just about continues when it comes to energy as a market. Well, if you move on and if you look at the OPEC and allies, well, they did talk about postponing their output cut and that's exactly what the markets will be looking at. This is a table that tells you on where we have come in from the highs of this year. We're almost down $20 from the highs in this year and the pressure just about continues even at this point in time. So 92 to 72 and 87 to 69 tells you that from the highs we're down by $20 in this year at this point in time and expectations that you could go further down. Important would be to see if the OPEC can actually defend that $70 mark for the Brent prices, and that's exactly what they seem to be doing right now. So OPEC and allies, the 8 members that is, were expected to increase production by 180,000 barrels per day from the month of October. As of now, the planned productions have been moved on by 2 months. The OPEC also in a statement did say yesterday that there could be a pause further or a reversal if the markets so need it like that. So that in turn should have been supportive, but not really. The markets also are looking at weaker demand from US and China, and that really is a concern there. And apart from that, it also has to do with the inventories from US itself, which have seen a decline of 6.9 million. That has not supported because the reason being the U.S. imports have been on the lower side is the reason the U.S. firms went down and got these inventories from the major reserves there. The U.S. gasoline inventories in the meanwhile have gained up by 0.8 million. The prices in the meanwhile are lowest since Feb 2021. So the U.S. demand itself shows a decline there. The inventories are down, yes, but the demand itself also is at around 2-year lows. And then comes China, where you are looking at all data on the weaker side. The PMI numbers, manufacturing, services has been weaker. The overall Chinese oil demand growth is down by 2% in this year until now, which is the slowest pace that you have seen in 15 years. The July oil demand numbers were down by 8%, and this is a 2009 low as well. And if you look at the kind of decline that we have seen in China, this is the lowest perhaps since 1929 is what the charts would suggest. So weaker demand from US and China continue to weigh. The China EV penetration, by the way, has crossed 50%. So that's another reason that the Chinese demand has been weaker. The Libya production has come back into the markets as well. The non-OPEC production has been increasing. So everywhere that you look, the supplies are increasing, the demand is not. And as I said, US non-farm payroll data is the thing to watch out for today.
Oh, absolutely. It is. I don't know what our markets are sensing. Maybe they have some whisper number. That's on a lighter note, but a big sell-off on the street underway right now.